Every trader I've ever met goes on the same journey, and it's the three main kind of ones that define you: your first big win, first big loss, and
Steve Ruffley is a professional trader, presenter, mentor, and author.
With over 15 to 20 years of experience in financial markets.
I think momentum in trading is just as important, if not more important, than motivation. Because everyone can say, I want this, I want to do this, I want it more than anybody else. But to grind it through and to get through the ups and downs, that's what's going to see you through.
You know, I'm curious, Steve. People are going to be wondering this. What is your style of trading right now?
I mean, essentially, I'm still...
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is going to be a phenomenal day because I have my man Steve Ruffley, who's been trading for over 20 years, and he's in New Zealand of all places. So he's up, what is it, early or late? What is it over there right now?
It's early, school time.
School time. It's late over here. Market's closing. You're just getting up. So welcome to the show, brother.
Thanks for having me, Alex.
Absolutely, man. I want to get us started with your beginning. Like, how did you get into this world of trading? And we'll take it from there.
Yeah, sure. I guess my kind of introduction to trading was old school. I mean, into finance. I went to university for a couple of weeks. I was doing an economics degree. Had a bit of a chat to the lecturer and thought, no, this isn't for me. Not that I knew more than the guy or whatever. The whole uni vibe didn't work. And his kind of last thing to me was, you'll never do anything in finance without a degree. So, went out into the world. My first job was for PricewaterhouseCoopers, placing investments. I got into finance and a graduate job without a degree. So that's a lesson to anybody, never let anyone tell you what you can and can't do. How I got into actual trading was weird. I was actually in Gibraltar at the time. I've moved around a lot of places. And I was down at one of the ports and I met some guys, a lot of flash cars around, that kind of stuff. I'm like, we're just having a beer. And I thought, what do you guys do? So, well, we're traders. We just opened a trading floor in Gibraltar. I'm like, that sounds interesting. I like money. I like the sound of it. Let's get involved. And that really much is that's how it started. I went into the floor in Gibraltar, and it just been taken over by Revco at the time. So I was one of the first kind of Revco grads to be taught trading. So me and some of the guys have flown over to London. We trained in the Liverpool Street office, which is phenomenal. You're talking going up escalators. This place has got its own arcade. It's got its own deli, literally rows and rows of screens, guys with the 8 screens, the squawk being pumped in. It was like, I'm a bloke from Bolton, mate. It's like, for me to see stuff like that was just absolutely, it
That's
just
cool.
crushed all your senses. So I kind of went on this kind of trading course, quite intensive. I guess when I kind of talk about it, it's almost like The Apprentice, the show. And it's like, if you don't pass these tests, you were fired. But you really were fired. You were off the course. So you passed the course and you got funded. I know like this kind of prop funding stuff is very popular these days, but I was like the original pro version of it. So it's pretty kind of cutting edge stuff, I guess, at the time. And then you passed the test, you went on trading, and that's how I started trading. Was really just by meeting some guys.
So you meet these guys, you go and take this test. Could you explain a little bit about that experience in terms of, like, did you just immediately, I mean, obviously you passed the test, but was it like easy for you at the very beginning? Like, I mean, how was it? Like, you passed the test, you joined the firm, are you making money right away? Like, what is that like?
Well, firstly, when you're kind of young, which I was, you're taught a lot about economics and finance and, the kind of the fundamentals. And then, you have to read every technical book that was ever written, like Candlesticks by Steve Nissen and that kind of stuff, Market Wizards. So you have a lot of information, you have a lot of knowledge, and then you put it in front of your 8 screens. You have no idea what you're doing. You don't. It's just like, now you trade on ladders on TT. This is the DAX moving like this, which I was trading, and you buy and sell. And all the kind of education doesn't go out the window. But, you sat around looking at guys making £1 million a day, and you're like, well, what do I do? So you buy it and you sell it and use as much size as you can. That was it.
We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show.
So when I talk about, and the things I've done, like, the books I've written and stuff like that, it's like the one thing was, you were there for the speed, the execution. That's what you pay for the setup, because trading isn't cheap. All the things you have in front of you, your screens, your feeds, that always going to be paid for. And, it's no matter what it was, from the spread traders doing, butterflies and condors to the outright traders, everyone was trading some kind of size and looking to jump on things quickly, because that was your job. You were sat there, for 8, 9, 10, 12 hours a day. And when things would happen, you react to the markets. And, the more you reacted, the more size you traded, the more money you made. It isn't rocket science. So a lot of my journey, original journey, was trying to figure out not really kind of, how the kind of trading world worked, but how I fitted in to this model of trading very, very quickly, very short periods of time, getting money in and getting money out. So, yeah, I mean, when I started, I had big days, £10,000 days, £10,000 in hours. For somebody, I was back home, that's what people made in a year. So there's also that kind of mental preparation. And yeah, like everybody else, you have your ups and downs. And, I found the very kind of introduction to professional trading, a massive roller coaster, because although they teach you a lot of things, there's nothing about the emotional side. There's nothing about the real world application of making and losing money very quickly. So that's a journey that every trader has to go on. And it's no different from the kind of pro side. And yeah, I mean, that's where the journey started. It's certainly not where I am now. I guess if anything, I'm more the opposite side of where I started, in terms of my understanding of the markets, understanding of myself, and how I choose to make money.
I want to dive into that, but I'm very curious, just for those who are listening, how did you learn? Like, what did you learn? Like, what was your first, like, strategy, if you will, that kind of got you going? Because, I mean, did they teach you something? They had to teach you something, right, to take the test, or how did it work back then? I don't know how those firms worked back then, so yeah, I'm just curious.
I mean, it's not. It was a lot of, like I said, fundamental. It was a lot of, the kind of understanding. There was no one sat there live trading in front of you. They'd stick you on a demo account, for a couple of days, and you'd see how the markets move, and then you'd be watching, your kind of technicals, and you'd be listening to the squawk. Because like back when I started, that's what the advantage was, having information, having a squawk service, having, live feed into the office, having that direct market access, having that, kind of very quick execution. Now, fast forward 20 years, we've all got that. You can pay for a squawk service now. So the edge really was that speed, connectivity, and being in the environment of people, making incredible amounts of money. And remember, not everyone was making huge amounts of money. But your shelf life as a trader, if you weren't at least making 6 figures, you're out of the game just to cover costs. My buyout of my original grad contract was £250,000. That's 20 years ago. So you had to pay that back. So the amount of money you had to make to pay that back, pay all your costs and pay yourself, and your 40% tax on top. Never forget. You're talking large amounts of money. Very few people actually did it. I only know one guy in particular that actually did it, that actually paid that grad scheme out and got on. So what they taught you, as I say, was a lot of the kind of fundamental stuff, the kind of the big picture stuff. All the things you learn was by watching price action and a lot of the kind of technical side and how the markets reacted to news. So a lot of my early big trades and how I made money was reacting to news, reacting to, the ECB, the Fed, I had things like quantitative easing when I was trading. The introduction of that, the bombings in London, again, not nice things to happen, but they do move markets, and a lot of your job is to jump and interpret, that news, and to make money from it. That's what you sat there to do. So a lot of it was reactionary trading. So it was a lot of highs and lows, a lot of boom and bust, and that's
Mm.
really kind of why I only lasted about a year and a half or so on the floor before I thought there was going to be a better way, because I was pretty erratic. I knew I could make money, but like
Yeah.
most traders find, making money is not that difficult, especially when you trade size. It's keeping hold of it. Okay, so my kind of lesson was a baptism of fire of things that I could do
Mm.
and things that I had to work on.
Could you elaborate a little bit on that? What did you end up having to work on to really start to see or develop yourself as a trader?
What I had to work on was the consistency. Um, I had to get out of the big trade mindset of always going for big trades and big numbers. When you trade something like the DAX in any kind of size, you really can't be wrong. Um, it's as simple as that. So when you got the market, I mean, people might not understand how volatile the markets were back then. I mean, you could trade the bund and you might, be working an order, over an hour to get a fill.
Mm.
Now the bund trades like the DAX, but then the DAX still traded like the DAX when back in the day. So it's not the same market conditions, but it's the same kind of idea. So when I kind of like decided that there was no way I was going to be able to pay this $250,000 back to go on a better spread, um, I needed to know more. And being surrounded by traders was great, but traders are on the floor. They're just big gossips. Do you know what I mean? It's always like they're not going to tell you the secret strategy. That's just not how it works. They all they all want to talk about the big wins and where they've been and what they think is going to happen, but actually they're quite secretive and solitary. It's not like the pit days where everyone's
Mm.
together and buying and selling and screaming. Everyone's quite their own little industry. Their own like kind of secretive little part of the office. So fortunately, because obviously I could trade and I got on well with the guys that were at Revco, and they said, well, listen, why don't you be a risk manager? So I got to go behind the scenes and see how everybody traded.
Mm.
Now, don't get me wrong, risk manager is the least rewarding job anyone's going to do. It's like being, a quarterback in your terms, and then being, the assistant coach. All you do is get to see people make money every day, and you can't be a part of it. But you do get to see things that even the pros don't get to see. So it's a part of that world where you can
Mm.
take as much information as you can handle and see. And as I say, it really came down to what I already knew. It was size, it was time, but it was also the products that people traded. It was the times that people traded. There were lots of patterns, but you could see when people were absolutely right, but also you could see everybody when they were wrong. So it was a really interesting thing for someone like me who's very much kind of pattern driven. I see patterns in lots of things. Kind of where I trade, I even see patterns in my P&L shift. Whatever. It's that's not like the secret. The secret is how
Sure.
you connect to the
Mm.
markets and how you connect to you. So when you can see that people are consistently making money, that it isn't, made up, it isn't, some illusion. Some guy's been sat in a sim all day, like we see now on TikTok, and he's
Yep.
gone and rented a Ferrari. No, the car park was full of Ferraris and Astons. It was real, and you got to saw it, and you got to go out for a beer with these guys. And that was the kind of like I always talk about the
Mm.
motivation and momentum. I always had the motivation to make money, but when you're not consistent, you lose that motivation, and it's very hard to get that momentum back. So I think momentum in trading is just as important, if not more important, than motivation. Because everyone can say, "I want this, I want to do this, I want it more than anybody else," but to grind it through and to get through the ups and downs, that's what's going to see you through. And 20
Mm.
years later, I still don't trade that much differently than when I started, but then I also do, because it's the
Mm.
mindset, it's how I do it, how I deal with things. But trading, it is. It's not a get rich quick thing. I can make close to six figures in an hour, but that takes a long time, a lot of dedication, a lot of ups and downs, a lot of learning, a lot of understanding what you can and can't do. And I think that's what a lot of, especially retail traders that I've dealt with for a long time, kind of fall at, because they have all the initial desire, motivation, and the will to win, and then the market grinds them down, and it's not what they expected, and they do something impulsive, or they'll do something. And listen, nothing wrong with doing something impulsive, but it's where you are in your journey. Every
Mm,
trader I've ever met goes on the same journey. They just hit different points, different times in their journey. And it's the three main kind of ones that define you: your first big win, your first big loss, being consistent, and realizing you can make it. And that can be, a very different kind of time scale for a lot of people, but it's going to take time for everybody. Very few people, again, maybe one or two people I've ever met, and I know a lot of traders, have just come in and smashed it and continually smashed it.
mm,
But they've always had that big loss. But on the mirror side, and this is what I say about every pro trader I've ever met, every good trader I've ever met, they've all had a big win. They all have a big win story. Yep, because you need that. You need that in your journey for your momentum. Because it's all very well saying, you nick a grand a day, then over a period of a year, it turns into this. Your job as a trader is to hit stuff when the market happens, the market presents something to you. Because everyone, again, knows that, you have to trade some sort of size. So what you can do on a micro lot or a one lot doesn't mean you can do it 100 lot. Doesn't mean you can do on 1,000 lots like I do.
mm,
Okay, but everybody knows at some point size equals money. But people hate to talk about trading. Firstly, in terms of money, you're not allowed to talk about trading in terms of money. Yeah, well, that's where I'm different. I talk about
mm,
trading in terms of money because that's what I understand. So I again got very disillusioned in my early days. If I took the money at my account, I could have bought a Rolex. That's what everyone wants to do when they start trading. It's the Rolex, then the car.
mm,
But is that really realistic? Is that really what you should be doing? For me, it was almost like you're moving into different cycles of who you are as a human. So it's kind of like you want the stuff. Stuff's important. Then you get stuff. Stuff's less important. It doesn't motivate you in the same way anymore. But it motivated you when you started.
mm.
Okay, so people forget all these things. We're just human beings. So yeah, you can make the markets as emotionless as possible, but all you're really doing is making the markets emotionless for you, how you interact with it. Markets aren't going to change for you. The markets don't care if you exist. The market's going to do what the market is going to do. So it's all really about how you put these different things that trading will present to you from a mental perspective, a motivational perspective, a money perspective, and how you deal with it. It's all about you, and there's no one else there. It's you versus the market, and this is what takes time for a lot of people to understand. And again, it took me time to understand, and different variations and different, kind of progressions in my career to get to be where I wanted to be. And I think you find at the end of it, you're still the same personality type you were when you first started, but also you're not the same person. I don't know if
Mm.
that
It's
resonates with
almost
people.
like, no, absolutely. First off, thanks for sharing all that and diving deeper because I mean, there's a ton of questions I have for you right now. Number one,
Mm,
I want to get back to a couple of some of the things you hit, but also relate to what you just said is well, I know when I first started rules, like you learn, I'm in the retail side, right? So
yep,
I bought tons of retail courses, right? So I,
absolutely, of
but then you
course.
learn all these rules from all these people. And when you're new, you think you have to follow that guy's rules. But
Yep,
what I've learned, I've only been doing this for 8 years, but what I've learned is like the rules are made for you for because they're unique for you
yep,
because they help you master your like how you trade, like how you like. Yeah, I know if I do this, like if I don't have these rules, I will screw up, right? Like
yep,
they're rules for you, so guidance. So I love that you said that because it really relates to that. But also, you mentioned that all you were able to see all of the traders trade at the beginning, and you said risk management was boring, sure, but you also said you were able to see like the best traders, win,
everybody.
lose, everybody. So did you see anything? And plus your experience. So this also entails your own experience for your 20 years. But after going looking back at that time with your experience now, do you see like a very distinguished difference, or is there a big difference at all between the traders that really do make it versus don't?
Yeah, absolutely, absolutely. I mean, when I say risk management was boring, it's you're the bad guy. Now, this is the difference, and again, I'll talk about this in different kind of things I've done over the years, like the books, etc. And what the pros have is a structure and a setup. So you have a risk management team. So if you're doing something, it's not for the risk manager to say you're wrong. It's for a risk manager to step in when certain kind of key things have been triggered. So if people are trading the same product and you're going the opposite way and keep losing money, it can just be a phone call saying maybe this isn't the time to take that view. You can't tell them what other people are doing, but maybe it's just by the experience and the kind of group, kind of mentality you've got. You can just point people and help them in a little direction. But also, us all traders know, retail traders. I class myself as a pro retail trader. I still trade retail. We don't have that risk management team. So not only do we have to be a trader, we have to be the risk manager, because we all know risk management is important. So it isn't the risk manager's job to tell you how to trade. It's to stop you from doing things. So the difference between the kind of pro and retail side is that it's always bad news when a risk manager calls. And when they come out into the floor, it's always bad news. If I have to come and see you on the floor, put my hand on your shoulder, it's stopped. It's not you stopped out or, you kind of finished in your career. It's like, that's enough for today.
Yeah.
You live to fight another day. And you can lose money in the morning and you can make money in the afternoon. Whereas you have that kind of knowledge that somebody is behind you that's like, yes, you never want to talk to them because you think you know better as a trader, but you've also got that knowledge that someone's got you back. Now, as a retail trader, no one's got you back. And you're right about these rules and these kind of things. The rules on the floor was, you make money as much as you can, as quick as you can, and you don't lose it. Off you go. That's your rules. And as you say, you read everyone's books, courses, there's a rule for this, there's a rule for that. So when I moved into the retail space, I'm like, what? You guys have all these rules?
Yeah.
No, mate, I do whatever I want. And also now, I've got my own money. I'm trading my own money, so I can do whatever I want. I don't even need the risk department. But then also you realize you do need the risk department. That's another part of the learning journey. But it's the same with technical analysis. You can do candlesticks. You can do Fibonacci, Elliott wave. At some point, you get almost snow blindness of technical analysis. You have so much on your charts, it starts to contradict each other. And that goes back to what you said. It's about trusting yourself, your rules, your indicators, what you look at. Yeah, because it's a very personal thing. Your trading strategy has to be your own. That's why we talked just before this interview about parenting. Why is there no one book on parenting? There doesn't exist, mate. So how can there be one book on trading? There isn't a book on trading. There isn't a course on trading. All I think it is, and again, I don't want to go too deep here, but I've been looking into weird things recently, like, kind of levels of enlightenment in yourself. And it's more like when you read kind of trading things, and I said to you before, it's all about you. It's what you can handle, what your personality type is, how that merges with the markets. Because everyone keeps saying, you've got to get rid of your emotions. Maybe in investing, you have to get rid of your emotions. You set, you stop, you walk away for days, weeks, months, years. That's fine. When you're trading for seconds and minutes, you're going to feel some emotions. So I don't believe that you should, cut out the emotions. If anything, I try and harness it. And, from my experience on the floor, you're talking about that anger, that fear, that greed, that rage. I call it controlled rage when I'm scalping. When I'm in and out, very, very quickly. It's almost, it's not, I don't feel fear. It isn't greed that I want more money. It's all how them emotions manifest in you and then how they manifest in your trading. And it's hard to explain. It really is, because everyone's different. But I use it as a focus. I don't try and shut it out. I use it as a focus. And maybe that's trading in the zone for me. Maybe that's how it works. I don't know. Maybe that's just because I'm a lunatic. I don't know. I really don't know. But, from my experience, when the way I choose to trade and, the size I choose to trade, it's because I don't want to do trading just to sit down, go on Twitter. I followed the FTSE for 200 pips on one lot. It's like, I'm not interested in that. I'm not interested in sitting in front of the screen for any longer than I have to. I've been doing this a long time. When I see something, I come to the screen. I've got alerts, levels. I'm always checking what the markets are doing. When I'm sat down, I'm sat there to trade. But I don't want to be sat in front of the screen for 12 hours a day like I used to, because then you become over trading. You put your click size down small, you do a boredom trade just to be involved in the action. I want to be down, and it's very, you can only do this after like a long enough time, but you have to be almost not all or nothing, but you're trading to make money. The money, the outcome can only be money or your loss. Not trading for any other reason, if that makes sense.
No, it does. It's what I've learned over talking to people who have 20 plus years experience is that all of you, not all, I can't say all, but the majority seem to be so focused on sitting back and waiting for that number one play and
Yeah.
always waiting for that play because I mean, y'all been doing it for 20 plus years to where y'all have seen it over and over and over. At the beginning, you're trading everything and you might be making money, but then
Yeah.
you start to realize like, man, like one trade a month really made my month that month. Or
Yeah.
that one trade that quarter made the whole year, you know, like, and then when you start to see those things, then the challenge becomes just sitting there and waiting, but just for those ones.
Yeah, I mean, this is the real thing that again, that's why the floor is quite difficult because you got a lot of people trading a lot of different products. So you'd
Right.
hear noises. It's like, well, I know he trades that. Should I be looking at this? There's a lot of distractions inside and outside as well. Traders are traders are traders. A lot of distractions outside as well. I'm not going to go Wolf of Wall Street, but I got some stories. But for me, when I decided, it was all about the money, all about me. The isolation was key. And it was this kind of idea of, me against the world, me against the markets. That's always how my life's been for me. I was until I met my wife, I was the original lone wolf. Living out of a suitcase, living wherever I wanted. I could trade wherever I wanted, and but that's evolutions of who you are as a person and your trading journey. So that does change. But yeah, definitely for me, it's the older I get, the more size I trade. It is about waiting. Waiting for the right market conditions that set up with you. And some things, when you see them, even though they've been waiting for them, you wait. I mean, the big sell-off, I was predicting it, wrote a book about it. And did I make as much money as I thought? No, I didn't. But, I still made money. And again, it's managing those expectations that, when the stars align, and people are going to hate this, but there is an element of luck in trading. If you do something long enough in anything, there's an element of luck. And it can be there at the right time, there with the right kind of mindset, setup, because we can all press the button for, 1, 2, 3. That could be 3 lots to people. That could be 30 lots to people. To me, that could be hundreds lots. Again, retail, you can only clip a certain size. You have a size limitation to your clip. So sometimes when I'm getting to positions, especially for scalps, I'm going to be clicking the button, like maybe 5, 10 times, to start averaging into positions and build it. And people think that's irresponsible or reckless. You don't know what you're doing. Well, it's not. I trade a market. So that's how I get filled. Everyone can trade however they want. You can place your orders, your stop limit orders, your stop loss orders, whatever you want. You can trade however you want. I trade how I want. I'm average into positions, no matter what the style of trade I'm doing, I average in, and the position's always out in one go. So again, it goes back to very much how I traded at the start, but how I trade now and the person I am is very different. And again, that's the mindset and the kind of middle bit of the understanding where it all connects. And that's a time thing for everybody. And as I say, everyone goes on this journey. People will get it eventually. If you do it for long enough, you will get it. But it's the staying power. It's the staying power to be able to stay until that point.
Dude, what's cool, Steve, is how you highlight it again. And this is why I wanted to ask this other question is you've said that you kind of trade the same way you did back then. It's just you have changed. And this just shows like I want you to elaborate more on what you mean by you have changed. And I'm assuming that part of that is execution, like how you execute and so forth. Could you explain that? Because I know people hear, oh, I just got to get better at trading. I just got to get better at trading. And they might just be focused on trying to find only one strategy, right? They're always trying to look for a strategy, right?
What does that mean?
Yeah. So, and they're like, mindset doesn't matter. But I mean, we're talking to someone who's doing this forever, right? And so you're telling me what only change had to be up here for you to get to where you are today. So could you elaborate?
Yeah, I mean, what I found is, the charts don't change. My charts are very simplistic. I have a few fibs, few lines, and some Bollinger Bands. That's it. And I've even written software that people can have for nothing. It owes me nothing. I don't care. You can trade off the same charts I do. You can have it. But once you have that kind of consistency in your charts, and you're not trying to draw a triangle there. Oh, maybe I've used high Kanashi candles with this. That'll give me a better signal. Well, if the markets were that efficient, this all trading would be AI. It would all be
That's right.
algorithmic trading anyway. So where's your edge? Where's the human edge? A computer is always going to spot a pattern better than you can. It's what you do with that pattern. That's what's important. And it is. So yes, I was much more kind of, buy and sell very, very quick on the ladders. And as I say, as I progressed, I did do some averaging, on the floor. But when I started trading retail and I kind of got more comfortable with size, because that was my obsession, size. That's what I saw in the risk room. That's what I saw. Size equals more money, less time. Right. So I was obsessed with size. Don't get me wrong. I've been carted out. I've had, big losses. Yeah, I'm not saying I haven't. I've had big losses on size, but I can put size on. So when you can put thousands of lots on in a trade, you can put 100 lots on. It's like driving a race car. You can go around a track at 200 miles an hour. 100 miles an hour is nothing. Easy, isn't it? And I've done that in my cars. Yeah, I've done that. It's not that scary at all. And trading's just the same. So the evolution in yourself is understanding. And the biggest thing I got over was like the imposter syndrome, thinking that the trades you make are luck. And again, it comes down to that consistency, proving it to yourself. And what I struggled with in the early days, I'm like, I want to make money, loads of money. And that comes back to the things, cars, Ferraris, islands, boats. How achievable is that? I've made lots of money, but I never made, private jet money. So again, it comes down to having realistic goals of a year, being more responsible, understanding that if you do make money, you got to pay tax. There are grown-up stuff,
Unfortunately.
grown-up stuff. And we talked about having kids, having a kid changes you. It's like you could make X amount of money. That's all yours. Not all yours anymore. It's not. So, what I kind of do is, every year's, a different year. You start a year afresh. Sometimes when I was building like houses and stuff, you need to make more money. Other years, you don't have to make so much money. So, you spend your time and you focus on something else. So you trade less. When you have to trade more, you put an additional pressure on yourself. When you put unrealistic targets, you put unrealistic pressure on yourself. So it's a balance. And you have to find that balance as you move through your career, as you move through time. And sometimes you'll know it. Sometimes trading's easy and you think, why could it be like this all the time? I'm the Matrix, I'm Neo. Everything I touch goes. Then the next day, couldn't get a win if you tried. And it's no different that I've just been doing it for longer. I've had plenty of losses, I've had plenty of wins, but net over a period of time, yeah, I think for me, I've done okay. I'm happy. And I'm more realistic with what happiness is. But again, as I said to you, it's easy to say, you're happy with what you've got when you've got stuff. When you're starting, that motivation might be that watch, you're going to put some money into a house. I don't know. Everyone's different, but you've got to start somewhere. And again, a lot of things I've spoke about, when I've had kids and realized is that, trading's a great way, to make money and manage your time if you invest a ton of time in it and in your initial, kind of journey, because if you don't set yourself with the right foundation, then what you're going to do, it's get rich quick over a long period of time. There isn't any, and all these guys who want to like jump into Bitcoin or jump into the next big thing. It's great. Lots of people, I'm sure, have made lots of money, and I'm not knocking anyone for how they choose to spend their money, invest, what their views are in the world, the future of the world. That's great. All I'm saying is, you've got to understand how you are, what your goals are, how you fit in with the markets, and then that's what's scalable. Strategy isn't necessarily scalable. You're scalable. Your brain, your account, that's scalable. The strategies will come and go. Markets will, they'll trend, they'll go sideways. Nothing works all the time. So my kind of longevity in trading comes down to time and size.
I'm curious, Steve. People are going to be wondering this, and they always want me to ask, what is your style of trading right now? Like, how are you trading? What do you look for? Are you biased in any way? Just curious.
I mean, essentially, I'm still a heart of hearts a scalper. I want to get my size into the market and out as quick as I can. The more time in the markets that I am, the more exposed, the more danger. So, I mean, like little examples when the market started moving down. Yes, I do have a bias. I think, that the markets are going to correct. I predicted the correction after Trump came in. And I also said that it could be a very quick correction because, Trump's a salesman. Stocks go down, stocks goes back up, you're all saved. Stock market's not the economy. So yeah, when I was scalping just the DAX, it wasn't so long back, it was about £20,000 on side. And it's like, oh, I made £20,000 in 5 minutes. You know, it's like, yeah, well, so what? I'm going to see how low this market could go. And then by the time you've thought that, your position's back to zero, you're out, and then the market's done exactly what you thought. So this is the difficult part about size and trading and being able to put size into the market. It can go your way very quickly, but if you try and change the time element, the market's always going to do this before it does this. It's always going to do that before it does that. So you can make good money and be out and pat yourself on the back, go out, 20 grand in 5 minutes. That's a great day. Or then you got to sit there and think, well, now I can't trade because I'm going to do something stupid. Because now I expect to make that money back. And sometimes you've got to know when the opportunity cost has gone. So again, it's the mindset thing. And once you start chasing, which I've done, and adding more time to your trades, you're either going to be very right or very wrong. The other thing I don't do, which people aren't going to like, is I don't use a stop. So I use a monetary stop. Now, physically, the size I trade when I'm scalping, now I can use technically a stop for a longer term position. And longer term position is anything over 15 minutes for me. But when I'm trading very large scalps for minutes, I cannot physically use a stop because I will always get stopped out. I do lots of things that people say you shouldn't. I negatively average because I'm looking for very specific instances. So when you see the green, candle pop out of nowhere, I'm happy to short that. But I have to take the profit the first time it's offered. So if I try and get a full retracement or even a 50%, fib I've talked about for years and years, you will end up losing money. So it's adapting your style of trading to what you see. See, mostly when I'm a scalper, I'm reactionary. That goes right back to how I was brought up, not taught, brought up on the trading floor. You see something quick, you have the speed to get in and get out while the market does whatever it wants. So market can still go up and you can sell it for that amount of money, still make more money than any retail trader makes normally by buying it. But that's a different style of trading. That's being reactionary. So everything I do mainly for scalping is reactionary. Everything after that is predicting where the market will go. And that's where the time element comes in. So I can use big size to be reactionary because I've seen what the market's going to do, but you're getting less out of it because you've seen too much. But then when you look at the charts, the blank space to the right, you're going to see more things happen. So you need less size, but more time. So that's how really I've balanced it. More size with the things that I think are very much inevitably going to do something. Less size, more time, into the future, which is the future which no one knows. So it's that balance, but it's always within a day. Generally, the shorter time I'm in the market, the shorter the trade, the better I do and the more consistent I am. Yeah. The more time I'm in a trade, the bigger the wins, for sure. But again, I would say scalping 60, 70%, I generally get on side, therefore can make money. Whereas the kind of bigger trades, maybe 50-50. But with the right kind of win-loss ratio, it kind of adds out. But as I've said before, without those big wins or bigger wins, and I'm talking about tens of thousands, without those big wins, I don't think I ever would have continued trading. And maybe that's an ego thing, a psychological thing. I don't know, because nicking a grand a day, that's fine.
But when you also were brought up around it, though.
Yeah, exactly.
You're sitting down on day one, you see, it's just a whole different perspective of expectations of yourself, too.
It is, and that's a dual-edged sword. You live and die by it. So it's very difficult when you weren't, the million, pound trader, to kind of keep turning up to work every day and paying your dues. And, that was a learning curve for me.
And I didn't mean to cut you off there, but I want you to, you're kind of leaning into this right now. And that was maybe talk about, you have your losses, you have your wins, and you go through periods of like up and down emotionally too. And do you deal with this now? Maybe not, but I'm just curious, but have you ever found yourself in a period of your trading where when you make money and lose money, you were unhappy, period? No matter if you made or lost, you were always unhappy?
I think I'm always unhappy anyway. I'm quite a pessimistic person, but a realist, as I call it. That never kind of satisfied. That's why I've lived in so many places. I've roamed the earth. I'm always looking for something. I feel like I was put here for a reason, and at a certain point, you feel like money enough. Is that enough reason? So yeah, I mean, this again, it's the whole part of the journey. I'm much better when I'm working towards something. See, I'm what am I? I'm like a tiger. Like when I see its prey. A goal to me is something to be achieved. I hate losing. I hate thinking I've been beaten by anything. So if I've got a challenge, and I will do everything I can to get to that goal, to get to that edge, and that's what keeps me focused. So that's what was
Mm.
so difficult when I first started trading. It's like what I said. It's like, well, I want to be like these guys. I want what they've got. Well, you don't know what that is. That could be anything. So you're never getting anywhere. It's like, oh, I've got to this point. I buy a watch. All right, well, they've got this, they've got that. It's like, no, no, no. Then you step away from that. So my kind of evolution and journey as a trader, and especially the way I've done it over the last, I'd say, 10 years, is having a goal. So it's
Mm.
setting a realistic expectation that I know I can achieve over a period of time, like a year. And then that's what motivates me. So when I see something, I'm like, well, I don't have to hit that as hard
Mm.
because I'm this part of the journey. Or it's like, well, I've made some money, and again, you've got to do these calculations in your head, the speed of light. It's like, no, I've got money, I've made money, I could really go hard. This is a good opportunity. And it either works or it doesn't. But you know where you are. And that's that risk management thing. That's that bigger picture stuff. It's like, no, 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 no. I know I've got X. I know this trade could potentially make Y. So it's worth the risk at this point. Because at other times, you might be, and that's again why I do things differently than most people. I trade different accounts for different reasons. So, there'll be accounts I have to go back to that are down, I have to make up. That's like doing your homework as a kid. Then there's accounts that are up, well, that's your play money. That's where you can go and, you can try and push it a little bit harder, because you've got that backstop. And all these things, these take years to kind of put into place. And, they take a long time for you mentally to spin all these plates in your head and make
Mm.
decisions
Yes, it does.
instantly, and not doubt yourself. And that's it kind of condensed, really.
You said I don't want to put too many words in your mouth here, but you said something around the bout of you can learn this if you just have enough time. Something
Yep.
like that. And I believe that too. I think it just takes a long time. What you just said is balancing all the different plates that you got to balance in making those quick decisions.
Yep.
Could you paint a realistic picture for people who are watching this right now and have an idea in their head of like, I'm quitting my job tomorrow. I just found trading this year and I'm going to quit, end of the year, I'm quitting and I'm going full-time trading.
I mean, I do mentor people, and I hear that every single day. But it's always, unfortunately, the way we've, progressed as a society. It's always the older people that tend to have the money that want to trade. So it's kind of like young people are like, yeah, I want to trade. If I'm trading, I hate my 9 to 5. I'm going to do it. It's like, well, how much money have you got? 5 grand. Well, all right. Well, who's going to pay your rent? Who's going to pay the mortgage? How are you going to turn that 5 grand into what your goals are for your replacing your 9 to 5? And that's what's hard, you see, because then you see the guy that's got the money. Because I generally think you've got to have about 25,000 US to have a realistic chance of making money from trading. So remember, even if you double your account, 100% return in a year, you're still doing better than most hedge funds, probably all hedge funds, but you're still making less than someone that works at McDonald's.
Right. Exactly.
So, I mean, money makes money. It's a numbers thing, okay? Nobody can dispute that. So when people say I'm going to quit the 9 to 5, I found training, want to do it, it's again, it's are you mentally prepared, for the realities of still living life? That's
Mm.
the difficult point. But then everyone thinks if you're rich, you've got rich parents, they can look after you, you're still going to make it at trading. Well, maybe you won't because you don't have that fight, that desire. I mean, it's everyone's a unique case.
Yep.
Everyone's unique in how they find trading, how they want to trade, what the goals are, the motivations for doing it. And that's work when I've kind of worked with people one on one. I can generally gauge very quickly, where they are, if they're gonna make it, how quick they're gonna be on the inevitable journey of the up and down. So really, I mean, it's a very difficult question to answer. I'm not trying to talk around it. It's just if you've committed to say you want to trade for a living, That's big. That's basically saying, all your eggs are in one basket. This is what you're gonna do, and it's like that's great, and I admire anyone that wants to do that. But what's the reality? What's the reality of what? How much time have you allowed yourself for that to happen? Because that's what I found when I first started pro trading. You don't get paid. Yeah, so
Mm.
you've got bills to pay. Your bills to pay. For the office. It's £2,000-3,000 a month just to run a desk. So after a year and a half, I'm not from money. It's like I'm a trader. I'm in the city. It's like, but I can't afford to eat. It's just like this isn't fun. Living off noodles for a year. I'm like, no, that's enough of that, mate. I'm like, I've dedicated. Where's my money? Where's
Yeah.
my money? Show me the money. And that's the
Right.
reality, and I had to kind of get a job, because you get paid to be a risk manager. So I was like, well, I'm going to take this information in, but I'm still going back to trading. This is
Yep.
just a stopgap. Don't get me wrong. I'm still going back. I'm in. I get it. I'm hooked. I can't make enough money to make the whole thing work for me right now. And that's it. And then you have your second incarnation. Maybe you've got your third incarnation, your fourth, your fifth. Okay. Nobody, as I say, very few people start out and trading turns out exactly what they thought it was going to be. That just isn't how life works. I'm afraid.
It isn't. And Steve, I know people are going to be wondering how they can learn more about you. Could you
Yep.
let them know where they can find out more information about you?
Yeah, sure. I mean, I've been, around for a long time. I've got my own YouTube channel. I don't really upload stuff to it. I haven't done for quite a while. I did write my second book, The Pro Retail Trader. So that's more about my journey, what I'm all about. Some big stuff in there, some big stuff, big world view stuff. As I say, I wrote my first book, Rough Guide to Trading, about 10 years ago. And, I was a younger guy then. That was much more kind of, your introduction to trading type stuff, your basics. So that's a good introduction. This one's a bit more, about the journey, about the realities of trading. Maybe a lot of things that people do and don't want to hear. This isn't a book where it's like, yeah, you got to read my book, you're going to make it. I'm basically saying you're going to read my book and you got a long way to go, mate. The opposite. You're probably not going to make it. You're definitely going to be a pro trader. I know that. But doesn't mean you can't make money. So brutal honesty, I think some of the reviews say. And I think, anyone that's going to go into trading, especially full time, needs that brutal honesty. Because if you can't handle that, you can't handle the markets full stop. Simple as that.
Simple as that, Steve. Well, look, brother, I know people are probably want to learn more about you. Is there like a social media? Are you on social media like actively at all?
Yeah, I like a good rant on Twitter. So everything is me is Steve Ruffley. So steveruffley.com, Steve Ruffley on Skype, Steve Ruffley on YouTube. Just Google Steve Ruffley. You'll find a way of the ether being able to speak to me. And my kind of philosophy is anyone gets 15 minutes. You can talk to me for 15 minutes. If I think there's any mileage in you, we'll talk. But yeah, I'm not saying go out and buy the book. I'm not a salesperson. I don't have a course you can buy. There's no subscription model. At the end of the day, you want to talk to me, you can talk to me. You want to buy the book and then talk to me about the book. That's probably better because I don't want to repeat myself. But yeah, I generally give anyone 50 minutes of time, and I'm generally out there to kind of give a little bit back, but only a little bit.
Awesome. Well, look, Steve, I appreciate you being here today, brother. And thank you so much for spending some time, man.
Cheers. Take it easy, Alex. Thanks.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.